This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Joining us today is Jason Brewer, the CEO of Marula Mining, following news this morning from the company that you've signed an agreement with Q Global Commodities Group, which is a South African commodities and investment house, for a £3.5 million investment and a co-development partnership. So we did talk about this, Jason, last time that we spoke about this upcoming news with this investment house. How are you feeling now that you're able to announce it?
Very pleased for the company, its shareholders, and it's clearly taken some time, but to have got this across the line with such a successful group, backed and led by such a successful mining entrepreneur, I think is a major coup for the company and really sets us on the path to further growth in 2023.
Excellent. I remember last time we spoke, you talked about that third-party validation. So I wonder if you can just explain a little bit more about who QGC are and the relationship, etc., that you have with the company and what they'll bring to Marula now this partnership is agreed.
Sure. QGC is headed up by Quinton Vanderberg, a very successful mining entrepreneur in South Africa. QGC has a number of investments. Mining is one of the main ones they have there. They've got a history in coal mining. They operate currently nine large coal mines, which account for about 5% of South Africa's energy supplies. So quite a well-established business. In addition, there's logistics, there's marketing, there's sales across all commodities. So we're getting involved with a company and an individual. Quinton's taken over almost 20 mining projects through to development. And these aren't small-scale mining operations. These are significant mining projects. So he's been through that whole phase, which we're in, and we want to go through on multiple projects. So the relationship with QGC and with Quinton is one where they are not just investing in us on a structured basis, on a tiered basis, to allow our projects to reach their full potential, but they're also providing technical support. They've got an incredibly strong technical team. They're also providing us that marketing and sales assistance with our end product. And that'll really allow us to get to some of the markets and some of the end users that perhaps as a junior company, we wouldn't. In addition, I guess one of the key advantages there is obviously the financial support. Their team is involved in all aspects of mining, from mine to port. So they really do strengthen a lot of the capabilities that as a junior company, you typically struggle with. So I think it's a great partnership. They love the strategy. They love what we're trying to achieve. And it's great to get them on board at this stage in our growth.
Excellent. Well, thank you very much for that. Just briefly on the pricing, of course, it is lower than the current share price, but that is mostly because it was agreed back in November, and the share price, of course, has seen rapid growth since then. I know you mentioned last time you're very aware of dilution of existing shareholders, but I think it's very important that there's a balance there between what the group brings to Marula and, of course, the existing shareholders. And from what I can gather from looking at some of the shareholder groups, people are generally very happy, I think, with the agreement here, despite the share price despite it being lower than the share price. But luckily, or good in a sense that the share price has stayed where it is. It hasn't dropped back, which often is seen when a company raises money. And of course, this is ahead of the AIM listing. So a good deal, I think, Jason, you'd agree?
I'd agree. Look, we started negotiating and started talking to Quinton back in October of last year. And we agreed terms on a deal, a far-reaching deal, not just one of capital investment, but also, as I said, the co-development. And that co-development goes to projects we have now and new project opportunities. So to have, call it a big brother, a balance sheet behind such a junior company is very significant. We agreed back then when the share price was about 2.4 pence, so about a third of where we're at the moment, that we'd look to do it at about a 50% premium to that. And also almost, a 90% premium to the fundraising we did there to shareholders at 2 pence per share. So at that time, it was a very good deal, very attractive deal. You don't change deal terms. You stick to them because that defines a company. that defines a management team. They bring a lot to the table here. And it took us until the past few days to finalize this, the co-development agreement in particular, as to how it's going to work. So yes, I can see why shareholders would look at this pricing at 3.75 and go, Jason, what are you doing? It's at 6.5, please. We bought shares here. I'm a major shareholder, like everybody else. So, yes, doing it below where we're trading at the moment. Again, you've got to stick to your principles, and that's about working with good people that don't just bring a dollar. A dollar is the same whether you're getting it from a shareholder in the UK, a major fund out of Europe, or a commodities house out of North America. What makes that dollar different is what else comes to the table. And here, having someone like Quinton join the board, this is his first board position of a listed mining company. Okay, that's a major step for him. I talked about that third-party validation. Him coming on and putting himself at risk by joining the board of such a junior company is a massive win for us. And his profile will mean that Marula is going to reach far more people, far more investors, far more potential shareholders than we could have imagined, several months into this journey that we're on. So, no, I can understand shareholders' concerns. I'd like them to look at the bigger picture and what we're trying to achieve. And I think this share price is going to move forward far. I didn't get involved with Marula because I thought it was going to be a 5 to 10p stock. No, that was never my intention, never my goal. I've got, visions far grander than that. And I think people can start to see by the people we've got getting involved, the Traxys of the world, and now QGC and Quinton van der Burg, that really defines how we're going to grow this company and the partners we will have taking it forward.
Excellent. Well, I'm looking forward to hopefully speaking and meeting to Quinton at some point. I know you're going to the Mining Indaba in Cape Town in a week or two's time, so I'm hoping we can perhaps catch up maybe as a three together during that time and just get Quinton's feel for why he's joined the board and his vision for Marula as well. Just finally, Jason, of course, you've had the first tranche of that money arriving already, and the remaining tranches are on condition of certain milestones, aren't there? So you mentioned about this setting you up very well for 2023. So there is lots of news flow to come, and you've got to meet those milestones in order to get the money. Yeah,
look, it's technical milestones. So the next tranche comes when we start drilling at Blesberg. We've already got the drill planning underway, so we're fast moving for that. The next phase is when we start drilling at Bagamoyo, the graphite project here in Tanzania, and the Kinusi copper project here. That's all underway. All the planning and preparations for those drill programs are underway. I'm actually here in Tanzania now, in Dar es Salaam. We're heading up to the graphite later this afternoon. I've got Richard Lloyd and Mark Nally with me, and our JV partner as well at Kinusi, Edward Raheny. So we're here now preparing for that. These milestones are all to be achieved over the next 12 months. Okay, so this isn't a long drawn out funding from these guys. They want us to deliver now and actually realize the potential. They had their teams up at Blesberg on a number of occasions, did an independent review of that. Their technical team love it almost as much as me, which is tough and hard to do. But they love that. They see the potential there to build one of South Africa's leading lithium producers. And that's a major thing for us. So having the funding now for all our projects and having a co-development agreement where they will get behind us and support other projects effectively eliminates funding risk from this company. We're not beholden to the equity markets. We're not beholden to, shareholders' capital capabilities of participating in funding. That's gone, and that allows us now as a management team, as a board, to really focus on just delivering, without that concern about, okay, where's the next dollar going to come from? It's there. Clearly, we're going to be generating cash flow out of Blesberg. We've already got our plans as to how we're going to use that to grow Blesberg. But we don't want Blesberg just to be the primary asset. We want the graphite, the copper, other battery metals projects which we have lined up to be able to go forward at pace and in parallel with that development. So this is to me a great win for all of us involved in this company.
Excellent. Well, we'll leave it there with that line. You said focus on delivering. I'm looking forward to very much following the story with you this year, Jason. But thank you very much for your time today. The CEO, Jason Brewer there of Marula Mining.
Thanks, Mark. Always a pleasure.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.